The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 29th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, you can send me an email, steve@tfnn.com. Just inside that heading, please put radio show question and inside the Tiger's Den. Any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow down 195 points. She's trading out at 21,257. S&P is off 26. Down a full percentage point. Trade at 24.14. NDX 100 off 126 points. That is down 2 2/10%. She's trading at 56 1/4. Russell 2000 down 1%, off $15 at 14.09. Semiconductors getting trashed and thrashed, down 3%. We'll take a look at that. That's off 34 points, trading at 1033. New York Stock Exchange down 0.7%. NASDAQ Composite off about 2. Wilshire down 1%. The trannies are down 0.4%. Volatility index up greater than 10%, greater than 20%, greater than a plus 25%. It's up 29.61% as we speak right now. It's trading out at $13 even, Steven. You know what we say about VIX indexes that close greater than 10%. If you're short, it's cool. Make sure you've got some stops in place after the market closes. And I don't know how the market's going to close today. We'll take a look at different support levels out there. You've got gold off $3 and silver down 9 pennies. What I wanted to do is actually go hunting around to see if gold has formed a bottom. So I'll just pose that question to you because I posed it inside the den earlier, posing the question, is anybody buying gold here? And the question would be, should we or shouldn't we? So we'll go take a look at that. You've got silver. As I said, that's kind of flats off 9 pennies. Light sweet crude up 24 cents, trading out at 44.99. Natural gas up a bit. Leading the charge here to the upside is Acuity Brands up $13 and change. That's over 7% to the upside. Constellation Brands up $10, 5.5%. Individual stock-wise, Select Comfort Corp, the mattress people, up 8.5% or $2.75. Pioneer Natural Resources up $2.60. Concho Resource $2.70. Tempur-Pedic, it's really called Tempur-Sealy, that's up $2.40. I don't really care much for that Tempur-Pedic bed. I don't sleep in one, but I did have laid down in a couple of them. I just don't get it. But that's just me. I don't need that space foam out there. Leading the charge to the downside, you got Priceline Group off $23, Google off 25. They're off 1 and about 2.5% respectively. Amazon down an even 2% or $20 to the downside. Intuitive Surgical off 17. Mercado Libre down 12. Let's go take a look at the markets first, and we'll come back and try to answer the question about gold or start go surfing around and see what it is that we can figure out. Let's go to the equity futures contracts first. Let's try to identify possible levels of where this little puppy is trading to. We'll start off by taking a look at the ES Mini. And in the case of the ES Mini, what we are focused on right now is the daily chart, daily and the weekly. So at the weekly chart, the top of the weekly box is 2402. The bottom of the daily, we're taking a look at market profiles. What we're taking a look at here Let me try to expand this, blow this up on my screen, makes it a little bit easier. You can see right now that the profile here for the daily puts us in at the 2401 and 3 ticks, 75, to the 2407. Sorry, take that back. It's 2403. Look at 2404 and 2407 is the area. So watch for that to be a level of support. We're almost down really to the bottom or to the center of the box, the point of control out there. So this could be a support level. Watch. You break 2403, and we'll go back right now and take a look at the weekly. 2402. So that really, I'd go with the 2402 and a quarter number. If you break below that, well, then that changes the entire game plan as to where price could pull back to. Could be a trend line, could be the 2358. But right now, 2402 ought to be the area where price finds support inside the ES mini. That would then go ahead and start turning around the S&P 500. Let's go take a look at the NQ out here, see if we can find any levels of support. Well, price is below all 3 time frames, that being the 6240 and the daily bottoms of their box. That's going to just put us back into the weekly. What I suspect we will see by the end of the week is we will see price bounce tomorrow inside the NQ. Probably not as big of a bounce as what we had yesterday, because we're truly in the holiday trading time frame. But I would think that the NQ could easily close back above its trend line. That's a trend line coming off of the November, the election low out there. Does it have to? No. If it doesn't, has the trend been broken? That trend would have been broken. But if it doesn't, the area of support inside of the NQ is going to be 55.20. You're trading at about 26 points. No, 55.20. You're trading at 56.20. That's 100 points below where we're trading right now. Price is trading on its center of the box, so the point of control. So this should be a fairly good place for support inside of it. Let's go take a look at the Dow as well. We'll look at the Dow Equity Futures contract, and this is going to help us to identify where its levels of support are. And its levels of support take us just like in the – oh, this is the ES. Well, wait a minute here. What the Sam heck happened there? Why is this showing – why is that daily chart showing the ES Mini? We're going to change that post-haste out here. Okay, now we got it populated. Let's wait for the profiles to fill up here. So price right now is down below the daily bottom of the box, 21,210. Watch for that. Watch for that. See if price closes back above there. If it doesn't, what you should anticipate is the next level of support for the Dow Equity Futures contract, 21,074. You're trading at 21,180 as we speak right now. So that's another 111 points to the downside. Is it possible? Absolutely. Does that take away all of the bullish projections that we have out here? Absolutely not. Remember yesterday, you had that New York Stock Exchange close with its advanced decline at a new all-time high. Has ever a bear market started when that has occurred out here? And you know the answer to that question. The answer is positively, absolutely no. Is this time any different? No, it's not. We talked about really the sideways, this choppy type market that we have been trading in. If we come back here, take a look at the indices. Let's just take a look at the S&P up 28 points as we speak right now. This is just really, let's turn off those profiles because they're really not accurate. Go ahead and put up the indices out here. But just really sideways since about May 25th. That is not how tops are formed. Steve Rhodes with TFNN, folks. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's get to the questions right away. Tim writes in, and thanks for sending all these emails, folks out here. Steve, what price would I be looking for to begin a legging into the Qs on the long side? Enjoy your show. I enjoy the fact, Tim, that you are listening. So let's go take a look at the QQQ series ETF out here and get a feel for what it is doing. Now, Tim, right now you've got 50 million shares today, and that is a beautiful thing out here. In fact, the more volume that you can see that piles on here, the better you are going to be. Now, the swing point that it's dealing with is 55 million shares, right? Is that the swing low? We might give it 137.49, or was it? 137.49. So that's from the trading day of June 15th. So that's going to be taken out. So there's going to be a lightning bolt pattern that I would be looking at, the first area that I'd be looking at. Let's go take a look at that A to B equals CD projection to the downside. Now, this would go ahead and form a Gartley buy. And you always want to take a look at those Gartley buy patterns, especially in strong legs, which there's no question we've had a strong leg since the bottom on November the 4th out here. And this would actually be on a daily basis, would be or could be the first A to B equals CD to the downside. Now, the very first price projection out here for you, Tim, is going to be 135.88. If we were to hit that area today, it'd be a tough call because it'd be coming in with a wide-ranging bar. So hopefully that is not what we see. And what we see here is a little bit by give back in price, and you come down to one of these areas between the 135.88, 134.14 range out here. Then that could be. Now, here is the key, Tim, before you need to start dipping your toe in the water. When this pattern completes, it does so because it creates a bullish reversal signal. So even to give you these price projections, what you want is a confirmation. And a confirmation of this pattern will not come until you get that bullish reversal signal. So you sit on your hands until then and wait to see if this pattern plays out. Now, the exception to that rule could be if we just had gargantuan volume today, then what you have at least is a bottom or a short-term bottom, because that is how the Qs make their lows out here. It's how it makes bottoms. You can just come back and take a look at the days out here when the bears were celebrating, when 109 million shares so-called off of the top, when really really what it was doing was pushing higher with volume on June the 9th. But nonetheless, that day had 109 million shares. That was the highest volume we've seen since sometime in 2016, and 104 million shares the following day. That's how the Qs make bottoms out here. But your preference is to let this pattern complete and then go ahead and get some type of bullish reversal signal in there. So I know that's not the total answer to your question. Another area and spot to be looking for, we'll go take a look at the NDX 100. And here, what I would be watching for is the price level of 55.75. And 55.75 is the weekly horizontal trading range level. Now, this is a level where price broke through. So you can see the price, in essence, as we take a look at it, inside of the NDX 100 has been consolidating in between the areas of 55.75. This is a weekly chart that you and I are looking at. So it has been doing that since the week of May 1st out here. So it's going to be for 2 months, right? The entire month of May, now June. Now, if 55.75 gives way, then price is going to come back to the sign of strength out here. This gap up from back on April the 24th, that's in the 54.88. So we're getting to that area, and you just have to keep your eyes out watching for what. And I would say you'd really look to a short-term chart once price gets to these levels. A short-term chart such as the NQ 30-minute chart. And if we take a look at it right now, what we're going to see is we are in the 6th of potentially 7 waves to the downside, letter F on my screen. We're also going to wait to see if we get a price relative strength divergent pattern. So there should be some type of bounce when and if that occurs here today, but that may not be the bottom, but we'll know when the actual pattern completes out here. There's none in sight as we speak right now, and our preference is really to get the NQ to look like this, to look like the ES Mini. You and I, we took a look at this yesterday. What we know is that when the ES Mini bottomed yesterday, created that nice little 7th wave move. That's the letter G on my screen out here. As I pull this chart back, so you can see the previous high. You just start counting the waves to the downside. Gets to that 7th wave move. Price was moving lower, doing with less relative energy. You get the bulls that come in, nice little bull sash candle that forms. Price gets above Stevie's red line. Then what happens? How does it make its high? Makes its high by making the exact same pattern. It does that at 3:30 this morning out here. Does it at 3:30? Right now, in this case, you're only down to a 4th wave inside of the ES Mini. So I don't have any kind of similarities between this and the NQ, but we'll want to keep our eyes on both of these time frame charts to see if a similar pattern forms. In the case of the Dow Equity Futures contract, we're going to also see that it is similar to the NQ and that it is also in the 6th of potentially 7th waves. If you take a look at what the Dow did as well, it went ahead this morning early, 3:30, moves higher, forms that price relative strength divergent pattern, gets up into that 7th wave, gives you the old bearish engulfing bear sash candle that forms next, and from there it has been curtained. So the market, quite frankly, with regard to patterns out here, is very orderly. Let's not get too caught up into whether it's 100 or 200 or even 300 points to the downside. Right now, what we're looking at is a move of, where are we at in the Dow? 226 points. So, Tim, I hope that assists you. Again, wait for the pattern to form and wait for at least a bullish reversal signal. We've also got a question here from Tom. Tom is asking, I'm long LABD from yesterday, trading off of the IBB. I'm wondering if you think this may have a few more points before I get rid of it. Tom, thanks for writing. Let's go take a look at the IBB, since that's what you are trading it off of. And the IBB, as we speak right now, is down with 815,000 shares. So this thing is moving lower with very light volume. Remember those days when it was the IBB that was leading the markets to the downside? Maybe it's going to be the IBB that leads the markets to the upside. Just to answer the question, what are those yellow rectangles on my screen out here? Come on, populate for us. What the IBB has done, it is broken out of a consolidation area. And so what Tom is going to want to do here is he's going to want to eventually flip that trade, because where the IBB is headed to is a price objective of 356 and change out there. Broke that consolidation, did it with volume. You're looking at a weekly chart. We're also comparing it to a weekly chart right now. Now, in the breakout that took place inside the IBB the week of June 19th that had volume of 16 million shares. And this week we're at 5.8. Price could come all the way back down. So you're saying, is there a few more points? There most certainly is. Depends what the rest of the market is doing out here. For price to actually come back to its breakout area, it would either be the top of the consolidation area, around 300, we'll call it, even Steven, or it could even make its way all the way back to the low of June 19th, which is 293.69. Now, for Tom, let's go back to the daily time frame. Let's go ahead and put up our market profile, see if there's any kind of pieces of morsels of information that we can provide him with to assist him in the trading. So here comes the daily boxes. You're trading below the daily, which is 310.27. So I would say today, if you were to see a close above 310.27, that might be a signal to you, Tom, that would be the time to unload. But it would be positive to close under 310.27. And as we take a look at the weeklies out here, that says 303.74 ought to be support. This is Steve Rhodes with TFNN. Tom, you ought to be able to get a few more points out of that trade, but it is coming down. Majorly light volume. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And yes, Gator, the volatility index is up 48% out here, 49% as we speak right now. So if we take a look at this, folks, the bottom panel on my chart is measuring the rate of change, one-day rate of change. So the difference between yesterday's closing price and where we are trading at right now. And so as you'll see that number go up and down, that's 47. The number on the bottom right in blue is telling you what that percentage change is. Now, somebody might think, oh, that's a great thing. If you were a bear, that is not what you want to see. You just want to see steady days that are less than 10% out there. And I know that seems odd, and you might say, I just don't believe you. You don't have to believe me. What you have to believe is the stock charts and the way that the market moves out here. If you take a look at the last time we had a nice big spike like this inside the spot volatility index, that took place on May 17th. That end of day, one-day rate of change is 46.38%. And what happened the next day? The market bottomed, moved higher into the highs that we saw out here just about a week or two ago, June the 19th out here, right? How about the time before that? Well, the time before that was back here when the market was consolidating. That was after a top had formed back in August of 2016. That rate of change was nearly 40%, 39.89, and that was on September the 9th out here. What did the market do after that? Bottomed. Short-term bottom, but bottomed and moved higher. It wasn't like it was a continued flush that toilet to the downside out here. And then the time after that took place on June 24th, 2016, 49.33%. But don't take my word for it. Instead, you can go figure out the rate of change, one-day rate of change of the VIX, and go plot it back on all of your charts out there. And what you will see is the same thing. You see, what you really want for a sustained bearish move out there is not these one-day wild swings in the volatility index. That's not what you want. You want days. You want, for example, back here when the market moved lower from March of 2017 down to really it moved lower down into, let's call it April out here. And you look at the bottom panel, was there ever a rate of change day that was greater than 10%? And the answer is no. Now, it's nice to get it all in one day. So those of you, we talked about this yesterday, that are day-ish type traders, and this is a very cool thing because you can make your money in a short period of time, and you don't have to wait it out. You already know where you're at out here. But if you're short, and you're going to and the market's going to the close and it's looking horrible out here, and you have this type of rate of change out here, I don't know how loud I can express to you or how much I can express to you. You've got to watch out, and you need to be watching those other patterns that you and I took a look at, on the 30-minute charts out here. The question above the 50-period moving average, if we hold above it for a couple days, that could be important for the VIX. And what that is referring to is, you can see, we come back here as soon as the chart populates out here. This chart right here that we're looking at on our screen, the yellow line is the 50-day exponential moving average. It's at 1109. And when the volatility index is above the 50-day moving average, that is short-term bearish for the market until it actually makes a high out here. And that would be true, but it is the exact same thing. You want to see price getting above it, not in one fell swoop out there. You move above it in one fell swoop, and what it does out here is it really sets the bottom. This chart here, by the way, takes us back even further with regard to where the volatility. I don't know what the rate of change was on this day back here when the market bottomed in November of 2016, but I know that it was above 10%, and you can see the bottom that formed out there as well. So is there really any damage that has been done to this market out here? No, not really. It's more sideways-ish type action. The market is forming a bottom. It is not forming a massive, significant, major type of top out there. So watch that volatility index. Let's go take a look and try to ponder and answer the question, or say, why would Stevie ask the question, is anybody buying gold when it's down $4 and silver's off 15 cents right now? Some of you know the answer. In a moment, all of you are going to know the answer. Why would Stevie be even thinking, having a thought like that? Well, let's go take a look at your friend and mine. Your friend and mine, the Japanese yen. As we take a look at it, let's get rid of these profiles. At the moment here, these profiles do not matter. What really matters is what it is that we are seeing inside of the yen. So we don't care about the market profiles. Now, what you have today is as we speak right now, you've got a bearish reversal signal inside of the yen. So here we've got the yen, which travels up, hits the trend line. Now, this is a trend line that you painted on your chart quite a while ago. This takes you back to January 3rd, 2017 out here. And as we take a look at it, so you can see the nice bearish reversal candle that formed on January the 4th. We can see that the next trend line here hits on May the 10th, and you get that nice little bearish engulfing bear sash candle on the very following session. And now we're getting the exact same type of thing. Now, look, trading session is not over. It's only 136. But price did what? Price ran up, hit a resistance level. Now you're getting the bearish reversal signal. Where will price head to? Likely, where price will head to is support, which is all the way back to down here on the June 14th session, which is around 108. What is it? 108.83. That becomes its target. Now, if your yen, not mine, if your yen is making this kind of a move, then what does that mean for T-bond futures, and what does that mean for gold? Well, let's just keep this easy, and let's just take a look at gold out here. If we take a look at the correlation chart, this is what you and I watch. The top portion here is the daily, is the contract, current contract for gold. The bottom portion is the yen. And what you'll see here is you'll certainly see that directional correlation that is really very much intact out here. Now, when the yen, we're looking now at the yen futures, by the way. So and the reason I'm looking at the yen futures, if I go look at the U.S. dollar yen currency pair, I've got a 15-minute delay, and I do not want to delay anything when you and I are peeking around looking to see, is the question of the day is gold bottoming? And is the correlation still in effect? Well, as we take a look at it, gold actually bottomed sometime around 9:20. It was actually 9:30 this morning. The yen actually made its lowest low on the futures contract in that 9:20 time frame out here. See a nice little bullish reversal signal. In the case of the yen, what we see is those nice stair step. Now, it's a 10-minute profile out here. So we're just looking at 10-minute charts because this is the one that easily gives you the correlation. Others have asked me, how could you even possibly talk about the gold bottoming when the dollar's been getting whacked and gold is doing nothing? And that is because the U.S. dollar index is a basket of currencies. And it's a basket case out there. And we don't care about basket cases. What you and I care about is what are the correlations that exist out here that are reliable from a trading standpoint. In this case here, it is the yen. Throw away the euro, throw away the pound, throw away the loonie, throw away the Swiss franc, and throw away the Swedish krona out there. Not the beer Corona. Yeah, we do not throw that away. We just add a lime, and we enjoy ourselves. And many of you will be doing that this weekend, right? There's July 4th weekend out here. So, looks to me like the yen currency pair has topped. The yen futures have bottomed. What's that say to you about Goldilocks? I think we still need to go take the gold priced in euros at least, get a feel for what it's doing. Steve Rhodes with TFNN.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 198. S&P is down 26 points right now. So let's go back to gold, and then a couple more questions that have come in by email. We'll get to those as well. So I mentioned, we took a look at gold. We took a look at the correlation between the yen and gold. We know that it is still in effect right now, and we have seen, from a daily perspective, we've seen a rejection of a level of resistance. We went down to a simple 10-minute chart, make sure that correlation is there. We have seen the bottom come in. We see that correlation is in effect out here. We'll look to a couple other charts as well for us inside of the yen. I mentioned, let's go take a look and see what gold is doing in the case of priced in euros out here. And this is really a potential problem, I do admit, and that's the bottom portion of my screen. So this is gold converted into euros out here, but it's making 100% move. So it busted through trend line resistance, but right now, what it's trading at, let's go ahead and put a red line in here, a red horizontal line as soon as we can, plain red line, that's what we're going to put. And so we can take a look at it, and you can see that, well, if I click on it, maybe we'll see it. So you can see that prices really come right down to a level of support, or it's very close to it. So I don't know whether this support is going to hold, but it's logical then for gold to be priced in euros and for gold to be priced in yen for us to see a bottom that would be forming. If this level fails, then priced in euros, you'll see a beeline for that larger trend line, the one that goes back to where, 2015, 2014. So here's where gold in euro, 2013. Excuse-moi. You can see that gold priced in euros bottomed back in January 2014 out here. That was not the case with regard to gold. This is why I have shared with you the thought that gold priced in euros is actually a better chart to be looking at least, or you ought to be looking at this as well. You can't just think in terms of dollars out there. You must also think in terms of euros. Now, in the case of gold priced in dollars, the upper portion of my chart out here, what we can see here is that it has broken a short-term trend line, but just by the hair of its chinny chin out here. And so it's not as if on the daily chart, and that's what you and I are looking at, we have any type of indication that there is a turn. And that means that you and I have to go look for the short-term trades out here. But we're seeing, even priced in euros, we can justify that gold is, in fact, trying to form a bottom, or at least it has moved back to a level of support. Probably the better way to go ahead and put that. Oh, man, the system, I think because of so many trades going on, my system just froze up a bit. But let's go back to the yen out here, and I want to take a look at a 30-minute chart if this thing will come over here. And what we can see, right, so you and I, we trade a number of different patterns. One of those patterns is that seventh wave move. If we take a look at what the yen was doing on a 30-minute basis, remember you and I looked at a 10-minute chart out here. On a 30-minute basis, it was singing in that Stevie Wonder key of G, letter G, wave number 7 to the downside, has since turned. Now, here is the key inside of the yen. What we can see on the 30-minute basis is price is just as we've been speaking out here, price has gotten above that price oscillator, that zero line of the price oscillator. What does that mean? Well, what that means is a couple different things. I'll show you. Let me go ahead and turn this on in a moment. Set that to true. And what we can take a look at, you're going to see this little conjunction. Can we call it a conjunction? A convergence, probably a better convergence of Stevie's two, his red line, his green line, his blue line out there. Red line being the oscillator and change line. But you can see when they converge, what that means is that what we see out here is we see that that price oscillator has gone to the zero area. Now, what that means right now, it means over the course of the next hour or so, you can see that this candle session that we are in right now, which ends in 14 minutes, is likely going to be a TD setup 9 count. TD setup 9 count. Now, the candle session is not trading in bars number 5 or 6 out here. So it does say that there's a lot of momentum. But here's what I think is likely to occur out here. What's likely to occur is a stalling with regard to the advance in yen futures out here. And we should be looking for a test of price and my red line. Now, it could be because that oscillator and change line continues to move higher while price pulls back. But the key is if there is a touch and go, if there is a kiss and don't tell. In other words, we see those areas, the red line and price, meet each other, and price holds as support and then starts to bounce from there as a trampoline. If that occurs, the 30-minute chart is communicating to you and I that it wants to move to higher price and that this was not a counter trend rally. Whereas when those two trains meet out here, if in fact price slides back through it, then it says it was nothing more than a counter trend rally. So you don't have to make that decision right now, but your eyes and ears ought to be focused on, and I don't know how your ears can do it, your ears because of what I'm sharing with you, but your eyes watching for that move inside of the yen to give you that message with regard to gold out here, which really isn't doing a whole lot, which may be to your advantage. If I look at the 2-hour chart, the 120-minute time frame chart out here, we can also see that from the high back here, well, I should probably make sure that I grab the right actual candle before I do my wave counts. There we go. So I didn't do it again. Come on. Let's do this correctly out here. There we go. What is happening? Here, let me try to do it with the red. Why is it not picking that up? Oh my goodness. What is it? Oh, I hate when it doesn't work the way it's supposed to. There we go. Oh, it is not in the 7th wave. I'm glad that I went back there to recount it. I thought it had gotten down to wave number 7 out here, but it did not. This is on the 2-hour chart. So the 2-hour chart is really not confirming what I thought that it did. So my apology there. But I do believe that, and this would then hold true for the miners. So we should take a look at the miners. It does look like to me we are going to see a bottom in gold take place during the next 24 hours. And it's going to, what I want to see, am I going to step my toe in the water right here, right now? No, it's not necessary. What I want to watch to see what happens is on that 30-minute chart for yen futures out here and see if we get that positive bullish confirmation. And then we can go ahead and take a look at stepping into the water. If we go take a look what profiles are going to show us inside of Goldilocks, just so we have something else to go ahead and hang our hat on, if in fact we wear a hat out here, and gold is trading at 12.45. We're looking at Stevie's synthetic contract out here. Well, it's interesting. You've got the 60-minute chart. You've got the top of the boxes at 12.48. So it closes above that, combined with what we would see on the 30-minute chart. In fact, let me just change this to a 30-minute time frame here for gold. So we'll do that. Try to keep things consistent. Well, in this case here, price is already above the top of that box, so that's short-term bullish. I'll put it back to the 60-minute. That way you've got the number to be focused on, because you'd like to see the 30 fail from a resistance standpoint as it did, and you'd like to see the 60 then next. So 12.48.10 would be the number. Now, the interesting thing here about, this is really interesting, isn't it? So while you and I have been doing this, and that was good spotting on your part, by the way, as you and I have been doing this, guess where gold is trading? is trading right here at the bottom of the daily box, 1246, where you would expect it to hold as support. You're at 1246.20. Very interesting. Now, gold may only bounce to 1263. This I don't know. But if the correlation exists out here and the yen has indeed found a top, or at least a short-term top, we probably get even more than that. And by even more than that, we're talking about 1280 to 1290 out there. So that's what's going on in Goldilocks land. And then inside the mining equities, if we take a look at the GDX, down by 47 cents, trade out at 21.96, trading back into a swing point out here, a nice little bullish engulfing candle coming in, which is testing a breakout area. Right here is a classic test of support. And it's not even all the way down there. The volume is light, 27 million shares versus 48. Looks like gold is bottoming, my friends. Steve Rhodes, TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 193. S&P is down 26. So John in Sarasota. Hey, John, how you doing today? He writes in, says, Steve, do you also have a bottom for the SPY? Thanks. So we haven't. So the SPY is different than the NDX 100, the QQQ series. If we take a look at this chart here, John, there is no A to B equals CD down pattern. So in the case of Tim, we were able to easily see that pattern and try to come up with a price projection. In this case here, we're just going to have to resort to just simply good old technical analysis. Not that that wasn't technical analysis. But in this case here, we can see there was a nice little gap that formed between May 24th and May 25th. And that's a little breakout area. So what we know is that prices come back to a breakout area right around this, the actual price level, did I give you the price? 240.73. Now, it's coming back into this area with a bit too much volume. Whereas the Qs make a bottom with volume, the SPYs, it can, but it's the QQQ series ETF that we really want to look for that big volume flush out day to identify a bottom. Volume, by the way, on the breakout from May the 25th was 64 million. We're already at 64 million shares. So coming back with a bit too much volume. This still could hold. If this holds, if this price level holds right here, and again, that price area that you're watching for is 240.73, that would be pretty strong. Now, there's a couple of reasons why this actually could hold, John, and why you want to watch this. And if it doesn't hold, we'll give you the price level. But if it does, let's go with the first thing. What if it does actually hold? Well, then a breakout area is held as support. If we take a look at the TAS market profiles, well, you can also see that happens to line up with the top of the weekly box. That is 240.67. So that's a short-term positive. In other words, prices come back to a level of support. If I look at the daily box out here, well, daily box isn't real helpful to you on the SPY because, I guess it's slightly helpful to you in that if it closes above 241.01 today, then another level of support has held. So at this stage, we could be there. I would be waiting, though, on the intraday charts for some other type of pattern to form and just see how the day plays out. You're going to have plenty of time. If this is a bottom, for example, or tomorrow, or maybe it's Monday, you're going to have some time while a lot of folks are just simply sitting on the beach. Now, if you're going to sit on the beach and you're trying to get your trades planned today, that's a different story. I would just sit back and wait. This could take several more days for a bottom to actually form out here. And Jesse wants to take a look at the XLF. Steve, in essence, Jesse was asking, what do I think about the XLF? Let's go take a look at the XLF out here. This is trading out right now at the price level. Is that the correct candle inside the XLF? Yeah, I guess that it is out here. It's trading out at 24.68. 86. Talk about being dyslexic. Now, what the XLF has done, ran really right into a level of support. Let's get the this trend line out of here where it had broken through. And the last time it was up in this area was back on March the 1st and March the 2nd. 69 million shares, 92 million shares respectively. You're up pushing that area with volume, but you've rejected it. Here you have that big old, looks like key reversal, bearish engulfing session. So what we know, Jesse, is this is a level of resistance. The top of the candle for March the 2nd, I don't have a price on it. It's actually 25.30 out here, but you're pushing into it. This says the XLF is going to be back up at this highs. When you push into a swing point, you do it with volume. Even if you reject it, you're pushing into a level of resistance with volume, says you're going to get back up and test it. The XLF closing above 24.55 is another short-term positive. So this wants to run higher, and you might say how high. And what I would do with regard to the XLF, Jesse, is put it back on a monthly basis and offer to you that this is eventually going to go get back to the May 2007 highs. And if you ask me when, I would tell you put it on your Thanksgiving dinner table. Folks, stay tuned. Your favorite polar bear, mine, David White's up next. After that, you've got the Tom O'Brien Show and Andy Heck to take it on home from 5 to 6. Have a great day. We'll see you on Fantastic Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.